Hi guys, Matthew Fernandes here with the Matthew Fernandes Group. I hope you're all doing well. I wanted to come on here today to basically answer a question that we get asked as realtors very, very often. And it's still something that a lot of people are unsure of exactly what the answer is. So I wanted to come on here, let you guys know from a general standpoint of what the answer to this question that we get asked all the time. The question is, what is the minimum down payment that I as a home buyer have to put down when buying my first home or buying my first principal, a principal residence? I don't want to get into the investment property side of things because it does alter quite a bit depending on the situation, depending on the lender. So we're going to talk about buying your first home and what the minimum down payment is for that. And it's pretty straightforward, a little bit of calculating that has to get done, but nothing that can't be done. So when you're buying your first home, depending on the purchase price is what you're going to have to put down as a minimum. So basically, up to $500,000, so up to $500,000, the minimum down payment you're required to put down is 5%. And of course, you can put more if you wish, which will help bring your monthly payments lower, but we're now just focusing on what the minimum is. So you're going to be putting 5% down if the purchase price is under $500,000, which in Toronto, very, very rare. There still are some condos under that price point, but it is definitely a rare find to buy something under $500,000. So if we go to the next category, if your purchase price is between $500,000 and $1 million, you have two different portions, so it's staggered. On the first $500,000, you're required to put a minimum of 5% down. Anything between $500,000 and $1 million, you have to put 10% down as a minimum. So let me give you an example. $850,000. You're buying your property, the purchase price is $850,000. So you take the first $500,000 and you times it by 5%, which brings you to $25,000. So you take that $25,000, that's what you pay on the first $500,000. The remainder is going to be 10%. So 10% on $350,000 is $35,000. You add those two together and you're at $60,000 minimum down payment on $850,000 purchase price. Now, when we get to anything over $1 million, you're required to put down 20% or more. The reason being that the mortgage insurance, and there are a few mortgage insurers in Canada, the main one being CMHC, which we sort of all know about and hear about. So anything that you're putting less than 20% down as a down payment, you're going to have to be insured with CMHC or mortgage insurance. You're going to have to get your mortgage insured when you're buying with less than 20% down. And CMHC does not insure properties that are over $1 million. And this is why you're required to put 20% down on anything over $1 million. Now, the question I get asked often as well is, what happens if I buy for $1,005,000? Can I pay 10% and 5% on the first million and then 20% on that 5,000, or if it's 1.1 on that 100,000? The answer is no, because CMHC does not insure properties with a price point of $1 million or more. So the answer is you have to put 20% down no matter what. Even if it's $1.5 million, you're putting 20% down on that, which brings you to just over $200,000. And guys, that's sort of the general answer to the minimum down payment here in Canada when you're buying your first property, your first principal residence, because as I said, it does change a bit when you're talking about investment properties or other types of properties. If you guys are watching and you're enjoying the information, and please give me a thumbs up. Make sure to subscribe to my page where you're going to be notified of other similar videos to make sure you guys are informed in the Toronto real estate market, and always questions that you may have, if you don't mind commenting below, and I can do the next video answering some of the questions that you guys have. Another thing to keep in mind when we're, just wanted to talk to you about the mortgage insurance. So basically, mortgage insurance is applied to any mortgages with 20% or less here in Canada. So every lender will have to have the mortgage insured through one of the mortgage insurers. And basically you're going to be paying a premium on that mortgage, or it's added to the mortgage. And that ranges anywhere between 0.6% and 4.5% that is going to be added to basically percentage-wise on the amount of your mortgage. Very important to speak with the professionals. I'm not a mortgage professional, as you guys know. I'm a real estate agent, and I can put you in touch with the best mortgage professionals out there, in my opinion, who will look after you and make sure that you're getting, pre-approved. They're going to explain to you the monthly payments, lock in a very good rate for you, and make sure that you are ready to go as soon as you are ready to find your property. It's always important to get your pre-approval out of the way so you can search with confidence and make sure that you know exactly where you're comfortable at and exactly which price point you should be looking at, how much you can stretch. What your comfort level is very important. Looking at your monthly payments and what makes sense for you when you're starting your search. Thank you once again for listening. I hope you guys enjoy the rest of the day, and make sure if you have any questions at all, you can contact me via phone, email, put a comments below. Follow me on Instagram. I'm doing daily videos there, and it's 100% up to date on listings that are just coming onto the market, and a lot of exclusive listings and contents. Make sure to follow me at Matthew Fernandes Group on Instagram. Take care, guys.